Hello, Oracles. Well, it was not a pretty day today in the market. We kind of thought that was going to be this way because of the CPI data coming out tomorrow. The government has stated that they're expecting extreme inflation numbers that are going to be coming out, which are out of the ordinary. Obviously, we know this. So we are now going red, and it's a very, very similar pattern to what I have seen and what we saw back in January when we saw the January through March plummet. So very much of the same, and it literally started off the same exact way. We got the Fed minutes from last month and the stock started to tank. This is exactly what happened in January. So we're starting to see this, and there's been monster gap downs all along the way, and looking at the same patterns that we saw back in January, it's all exactly the same. Now, when we're looking at all of the FUD that is getting spread around there and the negative sentiment that is in the market, that's pretty much all the same as well. So looking at it, it's high inflation, interest rates are going up, Russia-Ukraine war, all of these, and none of these went away. So what we need to pay attention to is the fact that the media is what is really controlling this FUD being spread. Because we had a nice rally for about 3 weeks there, but did that stuff go away? No, it did not. All of it was still there. We still had high inflation. We knew interest rates were going up. Russia and Ukraine are still at war. So what has changed? All that changed was how the media is portraying all of this and how the market has reacted to that media portrayal. That's the only difference. So it's still there. So we took the advantage of this rally to sell out of any stocks that we didn't want to be in anymore, make a little profit if we could, and now we are preparing for this next fall that we are going to go into and use it as another great buying opportunity. And yeah, it stinks to see the market going red, especially as red as we are going, and we're falling hard, especially for Tesla. I mean, we're down almost 5% on the day today. So it's like, we look at it, it does stink, but for those of us who are prepared, and for those of us who are long-term investors, this is a great opportunity. So now how far are we going to fall? I dollar cost average because I don't know how far we are going to fall. But we can kind of take a look and see some different levels that we've got to see where we're going to be falling down to. And while I do look at some of the charts to see where the levels are going when it comes to RSI, when it comes to different patterns that we see in the stock trading, I also look at, just timing of sentiment, because sentiment moves the market a lot. And so we look at the timing of the sentiment, and we're going up to earnings right now, very similar to what we saw in January. The stocks are now falling. We have more negative news that is coming out. We've got Finland and Sweden joining NATO. And then NATO announcing that they are going to be moving forces to the Russian border. Extra FUD when it comes to Russia and Ukraine. We've got inflation. We've got the government saying that inflation is going to be super high tomorrow when we see it. Well, we knew this, but now the government is announcing it, which is going to make it even worse. We have the interest rates going to be going up even higher because we had the Fed last week stating that, well, if we see things in the inflation that are going higher than we expect or than we anticipate, we might have to go more aggressive when it comes to our interest rates. So we are now anticipating higher inflation, which then puts that fear in the market of, well, we are going to be raising interest rates faster. So the market sells off. And then to top it all off, I was reminded by Michael in the comments that Friday is the last day for people to pay their taxes and file them. So people are going to have to be selling off anything that they need for any profits or whatever money they need to pay off those capital gains taxes from all the gains that they had from last year. So this is a little pattern that we're going through, and it's just the sentiment swing is now going into the negative. Now, for those of you who went through the last 3 months, you know that it's only temporary, it's not going to last forever, and this is now your next buying opportunity to get in. And so for me, I see us falling, and this pattern has just started. So I do feel like we still have a little ways to go before we see a turnaround. Some of the key points that we're looking at, obviously we have CPI data coming out tomorrow. We've got the JP Morgan report for their earnings coming out on Wednesday, where they usually discuss the percentage of a possibility of a recession coming up. consumer spending numbers are going to come out of that. And then we've got Friday, which is the last day for taxes. On May 4th and 5th, we have the next FOMC meeting. So I think between now and then, we are going to continue to fall down. Now, we do have earnings that are starting obviously on Wednesday, and then tech earnings are going to be starting at the end of the month. But if you go back to January, we saw a little bit of jump up in the stock prices around that time, but it was maybe a couple of days, wasn't much, and then we continued to fall afterwards. So yes, it might be a nice little boost for those couple of days, but I gotta be honest with you, I am not a financial advisor. I don't have a crystal ball, but knowing that the FOMC meeting is coming on the 4th and 5th, I think if we are going to see a 50 basis point hike at that time, we are going to continue to fall afterwards. And then after that, we are going to get the April CPI data. And if the April CPI data comes in and we start to see a little bit of an inflection coming down, I think we might start to see the reprieve at that point, because that means that the June FOMC meeting will probably go back to a 25 basis point rate hike. So still a lot of unknowns. We may get 25 basis point hikes in May and June. So between now and then, I'm really looking until May 4th and 5th. That's my next main target I'm looking at, because I think we are going to be on a downward trend with some positive moments in between on our way down to that point. So I'm going to dollar cost average on the way down. I'm going to do a little bit at a time at first, just because I really don't know how far we're going to fall. We may get a sentiment change for some random reason along the way. In my gut, I do not feel it. Now, I'm not here to spread FUD. I'm not trying to say that we're about to crash the market. I'm just being realistic, and I think this is a great opportunity to buy more, because anybody who bought in during that last dip between January and March knows that they had an amazing opportunity right afterwards, and if you bought in during that time, your gains were great afterwards. I think we're going into another period of great buying opportunities to be able to get into your favorite stocks, and then you're going to be able to see them grow immensely afterwards. If you're a swing trader, this could be a great opportunity to make some big bucks. For me, I am not. I'm a long-term investor, so the stocks that I do want to get out of because I was in them for a while and they're just not doing well for me, and I want to free up more cash, I can dump those and use that money to be able to put into the better stocks that I like, so that when we come out of this, we're going to do so much better. We had Shopify, who just announced a split as well. We are going into split season, very similar to what we saw in 2020. Lots of companies are splitting and announcing different splits, and they're all coming over the summer. So just looking at the timing of a lot of different pieces that are going on with these companies, I am seeing the sentiment swings, and it could be going in 2 to 3 month swings. We might be going down for another month or so, and then we're going to come right back up again, and we're going to have all the positivity between splits that are going to be coming out. Inflation, news is probably going to be inflecting down. But remember what we went through last time. We came out and we had a great 3 weeks of a rally, and what changed? Nothing. Nothing changed except for the sentiment in the market. But the reality of the situation is we were still ugly. So you never know, we can hit that June mark and all of a sudden the sentiment changes and people just feel better, and we're in the summer and we're going to be buying more and spending more, and the stocks are going to rally. So this is my anticipations, and I thought we were going to drop today, and we did. So we will continue to monitor this. We'll continue to pay attention. I'm just going to continue to be an agile investor because I don't know what's going to happen in the future. I'm just going to dollar cost average my way down, and then when we come up, I'm going to enjoy that ride as well. And so market-wide, especially in the NASDAQ, which is the high growth tech stocks, there's been quite a few gap downs. And so gap downs are no different than gap ups, so you're just going in the opposite direction. But they still behave like gap ups, and those gaps like to get filled. So we've now fallen and gapped down several times in the NASDAQ, several times in Tesla. That means that we are going to come back up. Very good, clear signals that we will return to these levels. So this is why these are going to be some great buying opportunities going forward over the next month. And when we talk about gaps up or down, what a gap is when a stock price opens the day after higher or lower than it closed the day before. And over the course of that day or any time in the future, that gap needs to get filled. And it can get filled intraday, it just won't get filled pre-market or after hours. So looking at the NASDAQ today, we gapped down, I believe it was about 2%. And so with a 2% gap down, that means that we have a 2% gap that we need to fill going back up. Sometimes it fills during the course of the day, other times it does not. Today it did not. So we have several gap downs that we need to fill in the NASDAQ, in Tesla, and many of the tech stocks that are out there. And now, of course, we don't know when these are going to get filled. It can get filled tomorrow, next week, next month. It could be a little while before they get filled, but again, following the sentiment trends that we are on, I'm believing that it's probably going to be either May, depending on how the FOMC meeting goes, or June, perhaps July. But just looking at the swings we are going through, we're kind of in like a sine wave right now. And one of the big stocks that I'm going to be getting back into while we're on this downward trend is AMD. AMD is a stock that I've really liked. I have made some great profits swing trading on it in the past. I have now jumped into Nvidia, and now that AMD is below $100, I think it is an amazing buy. It can still come down further, which is why I'm going to dollar cost average into it. But AMD is a big one on my list that I've been waiting for it to break below 100, so I'm going to be getting back in on this one. Let me know in the comments below, what other stocks do you have out there that you're looking at to buy in at as we are on this downward trend? Thank you so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.